Ladies and gentlemen, welcome back to the channel. Tesla stock had a terrible day today. The stock down over 5%. Here in this video, we will discuss delivery numbers. Delivery numbers are coming out tomorrow morning. The expectations have come down a lot. Okay, I'll just tell you that from the start. Wall Street is not expecting a good number tomorrow. Now, maybe that means we could beat, what happens there, we'll discuss. But I'm really curious to see how the stock reacts to a bad number or a good number, because why? I believe the stock is trading more around AI and robotaxis these days. Okay. The evolution of Tesla will become less about deliveries, more about AI and AI profitability, AI growth rates, if you will. So we're going to get into that here in this video. We're going to look at the charts where Tesla stock could go in the event we have a bad number or in the event we have a good number. We're going to look at just the Wall Street expectations for delivery numbers as is. I will share with you my expectation for delivery numbers. We do have some economic data coming out tomorrow as well to keep in mind. And there is a clip from CNBC today from Cathie Wood where she talks about the future of AI, Tesla, Elon Musk, and obviously the drama that's going on between Elon and Trump. So the work is cut out for us here in this video. Hit that like button and subscribe to the channel if you have not done so already. Now, if you guys want to come trade with us live in real time and get notified every time I make a trade on these under the radar AI stocks that are 10, 20, 30, 40, 50, 100x opportunities, check out that link down below in the description of this video. Here's the deal. It takes a lot of time to filter through small caps to find the good ones and disregard the bad ones. That's why most people don't do this. It takes hours every single day. And then even then, it's still like you're almost scratching the surface because there is so many, there's thousands of small caps out there. And if you want a community that does that work for you, obviously not a financial advisor, verify all DD that is posted in that group. That is especially valuable to you. So let's go ahead and get started. First and foremost, I will say I was wrong. Typically, delivery numbers come out Tuesday morning, 2 days after the end of a quarter. Now, 2 days after the end of the quarter is tomorrow. So delivery numbers will be coming out tomorrow. This article, I think, does a very good job of breaking down how the expectations for Tesla's Q2 delivery number have changed. Okay. So this is crazy. The analyst consensus for the first quarter was over 450,000 deliveries in January, but that number dropped to 377,000 deliveries by the end of the quarter. So there's kind of this pattern where expectations start high and then they drop a lot by the time we actually get the number. Now, it says the Wall Street consensus for 444,000 deliveries in April indicated that analysts believes Tesla when it stated that the poor performance in the first quarter was solely due to the Model Y changeover and that it could return to growth or maintain demand as it had delivered approximately 444,000 vehicles in Q2 2024. So that was the estimate at first. Now, the Wall Street consensus for Q2 deliveries is 385,000. This represents a 13% decline year over year, despite Tesla currently offering record discounts and incentives, which that's not really where we are. I think this article throws that way out of context. Tesla's not cutting prices anymore like they were during the price war, right? It's just a different kind of environment. Now, the consensus for full year deliveries stands at 1.6 million units, which is still, down from the expected 1.85 million total full year deliveries expected by analysts at the start or the end of the first quarter. So, I mean, here's the good and the bad. The bad news is it's bad. We might actually miss on deliveries tomorrow morning. Like, that is a possibility. If expectations are 385,000, we could come in around 360 to 350,000. That could be in the cards. Okay, that's the bad news. The good news is we have AI. We have robotaxi. That is going to be the driving factor of growth for Tesla over the coming years, over the coming decades. And that is what Wall Street is going to start paying attention to. Now, there's the big question on scalability of the robotaxi. When, how fast, what countries or cities or states, right? There's a lot of open-ended questions there. And so far, we haven't heard anything definitive from Elon. I think they're going to talk more about guidance for robotaxi on this next quarter earnings, which should be around July 20th through like the 23rd. It's usually the first, couple days in the 20s, 20th, 21st, 22nd, 23rd. That's when we will get more updates on scalability of robotaxi. Okay, that's the good. So no matter what happens with tomorrow's deliveries, no matter what happens with the stock, that's the silver lining. Now, here's the deal with the deliveries tomorrow. Now, via some of this drama between Elon and Trump, the stock has fallen quite a bit over the past couple of days. Since that high we set on June 24th, Tesla stock is down already about 15.3%. So you've already seen the decline. Now, that doesn't mean we won't fall tomorrow, but you've already seen that. Now, from a trend perspective, from a technical perspective as well, you're sitting right on the trend line. Now, if we do get a really bad number tomorrow, like 300,000, 280,000, something crazy bad, which I think is highly unlikely, and I'll show you why here in just a moment when I give you my actual expectation, I think Tesla could fall to the 270s. Like, that is where you should see a lot of demand start to come in. That's where you kind of bottomed here in early May. You bottomed after that really bad 14% drop on June 5th. You bottomed in the 270s, quickly rebounded, thereafter. You're on this trend line right now. We should actually be able to bounce off of this and head back into the 330s here pretty soon. And I think that's honestly most likely because based on where expectations are from Wall Street, I don't think we're going to get a terrible number. Even if we don't beat, it's going to be like, okay, that could have been worse. Like, we've seen this on earnings before, whether it's Nike or Enphase or even Tesla, where Wall Street says, okay, that could have been worse. Is this the bottom of the, growth story getting worse? Like, is this as bad as it's going to get? And then things are going to get better from here? Kind of like tariffs as well. I mean, we went from 145% tariff on China, and then they fell to still 55%, including the old prior tariffs. People are like, cool. We got the worst possible, problem, 145% tariff. Trump paused the tariff, and then it's like, hey, is it going to get worse? Like, is it going to go above 145% after the pause is over with? Or do odds favor, the rate actually coming down? So that's kind of the psychological perspective behind what could happen tomorrow. Now, if we get a really good number, then clearly that's going to be a big positive for Tesla. I think Tesla with a really good number could be up over 20% tomorrow. Like 360 plus could be in the cards. But again, you're already down 15% over the past couple of days. So a drop to the 270s would be about a 10% decline. I think that's about as bad as it could get within reason, obviously. From the data that we see so far, that would be like my worst case scenario. 5% drop would put you back into about the low, high 280s, low 290s or so. That could be more realistic if we do get like a semi-bad number, like 340,000 vehicle deliveries. That would be kind of the expected level that I could see Tesla hitting. Now, let me tell you why or where my estimate for Tesla deliveries is coming from here. Okay, so you've had 130,210 confirmed deliveries in China in Q2. Now, this number could vary by a couple thousand or so. There's always going to be some accounting errors that come along with something like this. Now, you probably seen the US do about 85% of these deliveries as well. That's 110,678. Okay, so let's add that. And I know it sounds like just crazy mumbo jumbo, but my delivery estimates are usually more accurate than everyone else. Like sometimes we're within 1,000 units. So it's kind of crazy. It looks like Europe only did about 70,000 units. And it looks like the rest of the world is typically around 30,000 almost every single quarter. So when I pull these numbers together, you're looking at about 341,000 deliveries. Okay, that's a pretty bad number. Not terrible. I mean, that would be about 44,000 less than Wall Street is currently expecting. Now, the question is, what is the stock actually expecting? What is the markets expecting versus what are analysts expecting? Because analysts can have analysts could be expecting 500,000 deliveries tomorrow. Like, do you think the stock is really priced for that? No. Okay. If the stock was breaking out at new all-time highs, everyone was super optimistic, then yeah, you could say like Wall Street's probably expecting 500,000. 341,000, I think it's a toss-up whether or not the stock is going to be in the green or not, because we've already fallen 15+%, and Wall Street is so just bearish and negative around Tesla as of right now. So a little bit of the good and bad news, you're probably going to miss. But is it priced into the stock already? Probably. Now, if we do get like 341,000 deliveries and the stock actually goes up, then I think that's a clear sign, or doesn't like fall 10%. That is about as clear of a sign as you could possibly see that Wall Street is more focused on AI. That it's kind of, I think it's going to become like Apple. Like Apple can miss on everything on their earnings, all the subcomponents. They can even miss a little bit on iPhones. But if services miss, it's a wrap for Apple. The stock's going to fall. Now, if services come in with a big beat, the stock's going to rise. That's because services is a lot more profitable than the other hardware components of Apple's business. Okay. So kind of like Tesla, right? The cars, does it really matter what the growth rate is with the cars if AI starts to grow a lot and there's this huge total addressable market? There's going to be tens of thousands of robotaxis coming online in 6-12 months, and that's going to boost profitability. Like, that's probably what Wall Street starts to focus on. Okay, so that's kind of my thoughts around this. I think you're going to miss, but the stock may not sell off like you think it will, because one, we're focused on AI, and two, the stock mixed with the sentiment is not priced for 385,000 deliveries. It's more so priced for like 350,000, 300. I can even see 340,000 being like, okay, that wasn't terrible kind of number. Okay. Now, tomorrow morning, we do get challenger job cuts, expecting those at 110,000. That is planned layoffs by companies. So the higher, the worse, right? You want to see that number come in low. And the ADP employment change, which is the private payroll jobs report. Last month was 37,000. You are expecting 95,000. So again, you want to see that as high as possible and challenger job cuts as low as possible. And that could also have a role to play in markets. Now, if you guys have not seen as well, Trump's tax bill did pass in the Senate. Okay, it has to repass in the House again, which looks inevitable. I think the big question we have as Tesla stock investors is, hey, how does Elon respond to this? Is there really a new political party made to go against Trump? Like, how does that impact Tesla stock? Is Trump really going to look into deporting Elon? Some of the crazy statements they've made back and forth over the last 12 hours. Is Doge going to try to, crack down on Elon's companies? How does that all play into this? That, I think, is actually a much bigger potential risk factor for Tesla stock right now versus the delivery number tomorrow. Even though delivery numbers are going to move things, at any moment Elon's going to come out with a crazy tweet and the stock's going to fall another 2 to 5%, most likely, which is, I guess, just the cost of doing business, investing in the biggest AI stock in the world. Somebody said in the trading community as well. Link down below in the description of this video if you guys want to join it. somebody said, hey, it's Elon's autism. Like he can't even help it. It just, he has to say things when he feels like he should. And that's kind of where we are right now. So take a listen now to what Cathie Wood says about this Elon Trump drama, what's going on in markets. She actually thinks the markets are broadening out, that AI is going to be a big focus, that AI appliers are going to be, you know, a concentration of capital, if you will, that puts Tesla in a really good position. And she thinks the rolling recession could turn into a rolling recovery for this economy and for markets. So take a listen.
At a record high to finish the first half, the ARK Innovation ETF trading now near a 52-week high, up nearly 24% year to date. Joining us right now, first on CNBC's ARK Invest Chief Investment Officer and CEO Cathie Wood. Good morning to you. As we set up for the second half here, Cathie, I think there's a lot of folks who are trying to figure out have things already run? What's baked into the cake and what isn't in your mind?
Well, I think we have been climbing a wall of worry. I mean, a lot of people expected tariffs and wars and the controversy between the Fed and the president to really shake markets up. And of course, there has been some volatility. But these are the kinds of bull markets that I think are the most durable. When the market climbs through all of that controversy, it's really signaling something. And I think the things that it is signaling are interest rates probably are coming down. And I think what many people are not focused on in the inflation statistics are the housing numbers, and they get in there with a long lag. We think that the shift or the concentration towards just a very few stocks, which was a very unhealthy bull market, that is changing and the market is broadening out. And I think deregulation is probably one of the most important things that this administration is doing to unleash animal spirits.
You know, you talked about the inflation picture and interest rates. We just had another guest on the broadcast that said the opposite, effectively. He said, look, the economy is humming. It's doing quite well. They wouldn't touch interest rates if possible, and they don't think that they will be.
Mm-hmm. Yes. Well, I think we've been pretty consistent on this idea of we've been through a rolling recession. If you look at housing, which is actually having a little bit of a relapse today, housing plummeted in 2022 when interest rates shot up, and it has not recovered. Manufacturing has not recovered. And so we do believe that they will recover as interest rates come down, deregulation takes hold, some certainty about tax cuts and so forth occur, including immediate expensing, perhaps, of capital goods, which would be very positive. So we think we'll move from a rolling recession into a recovery. But what happens early in a recovery, if you will allow me to call this that, I know many people think we never went into any kind of slump, but we have sector by sector. What typically happens when you come out of a recovery is productivity kicks in because companies have been very conservative and especially amid all of the uncertainty. So productivity kicks in and actually drives inflation down much lower than anybody anticipates. And I think that's going to happen this time as well.
Cathie, want to talk Tesla, want to talk Elon Musk. He's been making some more public comments again about the quote-unquote big, beautiful bill. He's opposed, of course. But I'm so curious just what you've been thinking as you've watched all of this play out the past couple of months, the politics of it all, the impact potentially on Tesla, his now doubling down on Tesla, but where this all goes.
Well, I think what happened, and this could be considered a conspiracy theory, but, you know, with Trump and Musk so close at one point, and with China, President Trump's primary focal point when it came to trade negotiations at the end of the day, you know, Tesla's plants plant in Shanghai became a leverage point. So I think they've separated naturally. Now, I think it went a little overboard in terms of the drama. And I think the same is true today. I do think that Elon Musk is getting back to business, and he does want to transform transportation, continue to transform space exploration, really address some incredibly difficult health issues with Neuralink. And introduce productivity the likes we have never seen with humanoid robots. So I think at the end of the day, he'll become very focused on those very difficult problems, and this too shall pass.
Do you think that he's going to be out there effectively financing folks, financing campaigns to primary individuals who vote in favor of this bill? And if he does that, and whatever time and attention that takes, and whatever you think about the politics of that, does that impact Tesla or any of the businesses or other ventures that he's pursuing?
Well, I guess in terms of dependence on government, SpaceX, I believe, has $22 billion in government contracts, and really has catapulted the U.S. into the lead when it comes to space exploration. I don't think the president that formed the Space Force wants to change that. And in terms of transportation, of course, we've got a patchwork quilt of 50 states from a regulatory point of view that have to bless autonomous travel. We were thinking and still think that will move up to the federal level. So maybe that's in question very short term, but we think it makes sense for the United States if we want to be number one in autonomous travel. FDA is another consideration when it comes to Neuralink. You know, I think what's happening is pretty miraculous if you've been following Neuralink. And the FDA, if anything, I think we've been most surprised by the deregulation that is taking place within healthcare and the desire of the leaders in healthcare to really either cure disease, get rid of chronic conditions. So, you know, Elon Musk is contributing to that cause as well. So, I'm sure there's political tit for tat. That's how these things work out. But Elon Musk is working on the largest AI projects in the world, the largest projects in the world. And I don't think longer term he wants to be thrown off really transforming the world.
Again, let me know your thoughts on all of this down below in the comment section. Hit the like button and subscribe to the channel again if you have not done so already, and check out the link down below for the trading community. Have a great rest of your day, ladies and gentlemen, and I will see you in the next one.